Welcome back to the channel, and thank you for joining me. I'm Algabot, and on this channel we break down automated trading strategies for MetaTrader 5, one piece of logic at a time. Today we're studying an expert advisor called Level RSI Reversal. It's a mean reversion approach that watches horizontal support and resistance levels and uses the RSI momentum indicator to judge when a push into a level has run out of steam. By the end of this video, you'll understand exactly how it reads structure, how it confirms with momentum, and how it manages every single trade. Let's get into it. So what exactly does Level RSI Reversal do? At its heart, this is a reversal strategy. Instead of chasing momentum, it looks for places where price has pushed hard into a barrier and is likely to rotate back the other way. It trades on two ideas that must agree before anything happens. The first idea is structure. The strategy doesn't use round numbers or arbitrary lines. It scans recent price action for genuine swing pivots. A swing high is a peak that stands above the bars on both sides of it, and a swing low is the mirror image. From those pivots, it picks the nearest support sitting below current price and the nearest resistance sitting above it. Those are the walls price is actually pressing against. The second idea is momentum, measured with the Relative Strength Index, or RSI. Tagging a level on its own isn't enough, because price breaks levels all the time. So the strategy also asks whether RSI has stretched into an extreme, at or below 35 for a potential long, at or above 65 for a potential short. And it asks whether RSI has started to tick back the other way. That combination captures the moment a one-sided move into the wall begins to lose energy. This expert advisor is built for liquid, range-prone markets. Think of a major currency pair like EURist or AUDist on the 15-minute or 30-minute chart. It suits a patient, swing-style approach because it spends most of its time waiting for both conditions to line up on the same closed bar. It is not designed to trade constantly. And of course, like every strategy, it can be wrong, and losing trades are a normal part of the process. Everything here is for education only and not financial advice. Let's walk through the mechanics step by step. The strategy only acts on a freshly closed bar. It ignores the noise of a candle that's still forming and makes one decision per completed bar. First, it runs some housekeeping checks. It needs enough history to measure everything reliably. It allows only one open position per magic number at a time, so it never stacks trades on top of each other. And it checks the current spread. If the spread is wider than the max spread points setting, which defaults to 30 points, it simply stands aside. Next, it measures volatility using the average true range, or ATR. This single number scales everything else, so the strategy adapts automatically to any symbol or time frame. The tolerance band around a level is set to the level toll ATR multiple of ATR. By default, that's half of one ATR. That's how close price must come to count as a genuine test of the level. Then it checks momentum. It looks back over the last few closed RSI readings, the extreme loopback window, 3 by default, to see whether RSI reached an extreme. For a long, the lowest reading in that window must be at or below 35, and the current reading must be higher than the previous one, showing RSI turning up. For a short, the highest reading must be at or above 65, and RSI must be ticking down. Now structure and momentum come together. A long signals when the just closed bar dipped its low into support within the tolerance band, yet closed back above the support level, and RSI was recently oversold and is now rising. A short is the exact mirror. The bar pokes its high up into resistance but closes back below it, while RSI was recently overbought and is now falling. That closing back on the correct side rule is what separates a rejection from a breakout. If price closes clean through the level, the idea never activates. Finally, risk management. For a long, the stop loss sits below support by the StopAtrMult multiple of ATR, one full ATR by default, because price trading beyond the level means the structure has failed. For a short, the stop sits the same distance above resistance. The take profit is then placed at the reward ratio multiple of that stop distance, 1.8 by default. From there, the structural stop and target manage the exit on their own. Now let's look at the actual MetaTrader 5 code driving this. At the top we have the inputs, the dials you can adjust in the strategy tester. Swing loopback sets how many bars on each side define a pivot. Level loopback is how far back it scans for the nearest level. RSI period. Oversold level and overbought level control the momentum filter, defaulting to a 14-period RSI with thresholds at 35 and 65. ATR period. StopATR multiple and reward ratio shape volatility and risk. Now the long block. You can see the condition. It checks has support and oversold turning up. So a valid support level exists and RSI is exhausted and turning up. Inside, two booleans confirm the rejection. Tested checks that the bar's low reached into support plus the tolerance, and held checks that the close came back at or above support. When both are true, the entry price is the ask. The stop loss is set to support minus StopATR multiple times ATR. Risk is the distance between entry and stop, and the take profit is entry plus reward ratio times that risk. Then trade.buy sends the order. The short block is a precise mirror image. It checks has resistance and overbought turned down. The tested boolean confirms the bar's high reached up into resistance minus the tolerance, and held confirms the close came back at or below resistance. The entry price is the bid. The stop loss is resistance plus StopATR multiple times ATR, and the take profit is entry minus reward ratio times the risk. Then trade.sell places the order. Notice that both sides use the same structural logic. The level defines where the idea is wrong, and that distance defines the reward target. It's symmetrical, transparent, and easy to audit, which is exactly what you want when you're studying a strategy. Now let's bring it all together on the chart. On screen we have a candlestick sequence, two dashed horizontal lines, support down at 1.0830 in green, and resistance up at 1.0900 in red, and below the price, an RSI panel with its oversold line at 35 and its overbought line at 65. Watch how the two ingredients combine. We start on the left. Price is drifting lower, candle after candle, sliding down toward that green support line at 1.0830. Notice what RSI is doing in the panel below. It's falling too, dropping through 40 and pushing down into the oversold zone beneath 35. This is the one-sided selling the strategy wants to see, a push that's becoming overstretched. Now look at the key candle. It spikes its low down through support, dipping into the tolerance band just beneath 1.0830, but by the time the bar closes, sellers can't hold it there, and it closes back above the support line. At that same moment, RSI ticks up off its low. That's the double confirmation, a structural rejection of support and momentum turning back up from an extreme. The strategy marks the buy entry right there, on the close of that rejection candle. With the long now open, see where protection sits. The stop loss is placed below support by 1 ATR, comfortably beneath the swing low, because if price traded down there, the level would have failed and the idea would be wrong. The take profit is set at 1.8 times that stop distance. Now follow the candles. Price lifts off support, and the next few bars build a steady climb. Higher closes, RSI rising back through the middle of its range. Buyers are in control, and price works its way up toward resistance. As it reaches up near the take profit target, the long is closed for a gain in this illustration. That's the full long cycle, exhausted selling into support, a rejection close, and a rotation back across the range. Now the market hands us the mirror image. Price is now pressing up against the red resistance line at 1.0900. In the panel below, RSI has climbed into the overbought zone above 65. Buyers are now the overstretched side. Watch the next candle closely. It pokes its high up through resistance, reaching into the tolerance band just above 1.0900, but it can't close up there, and the bar closes back below the resistance line. And right on cue, RSI rolls over and ticks down from its high. Again, both pieces agree, a structural rejection of resistance and momentum turning down from an extreme. The strategy marks the sell entry on the close of that rejection candle. For this short, the stop loss sits above resistance by 1 ATR, just beyond the swing high, because a close above there would mean buyers had genuinely broken through. The take profit is again set at 1.8 times that risk distance, this time below the entry. Now watch the candles roll over. Price slips back below resistance. The next bars print lower lows and lower closes, and RSI slides back down through the middle toward oversold. The decline carries price down to the take profit target, and the short is closed in this example. So across this one illustration, you've seen both directions of the same engine. A long signaled when selling exhausted into support and price rejected the level with RSI turning up. A short signaled when buying exhausted into resistance and price rejected that level with RSI turning down. In both cases, the level itself defined where the strategy would admit it was wrong. The ATR set a sensible buffer, and the reward target was a fixed 1.8 multiple of that risk. Remember, this is a clean, idealized example. In live markets, levels break, rejections fail, and not every signal works out. That's exactly why risk management is baked into every order. And that wraps up our breakdown of the Level RSI Reversal Expert Advisor for MetaTrader 5. We covered what the strategy is trying to do, how it combines pivot-based support and resistance with RSI momentum, how the long and short signals are confirmed on a single closed bar, and how the ATR-based stop and reward target manage every trade. Remember, everything in this video is for educational purposes only. It is not financial advice, a recommendation, or a solicitation to trade. Trading carries real risk, and losses are a normal part of it. If you found this useful, please like the video, leave a comment with the strategy you'd like me to analyze next, and subscribe so you don't miss the next breakdown. You can find more at www.OverboughtLevel. Past performance does not guarantee future results. Trade responsibly.